What's up, everybody? Today, I want to break down a strategy that I look for each and every single day in the market, right? So you guys know I'm not that big on mechanics. I'm more big on understanding the market story, right? And the gap fill is one of those things that are going to happen over and over, right? And I really love trading the gap fill because it really highlights the market auction, right? It highlights price action and how large money soaks up all the liquidity from one critical level to the next, right? So the day I want to be talking about today is 2/28/2024, right? And this was a perfect example of the gap fill because it's not perfect. It's not a perfect imbalance up to end of day, right? Meaning the gap doesn't get filled by a couple cents, right? It's not a perfect bounce off previous day low, right? To trade this day properly, you would literally need to be really in tuned with what the market was telling you. And that is exactly what I want to show you today in this lesson, right? So we're going to break right into it. So the first thing I want to break down is the pre-market plan for this day, right? So this is February 2028, or I'm sorry, February 28, 2024. So each and every single day on the Discord, I post a bullish and bearish scenario, right? I think it's extremely important to remain unbiased, right? The moment you start thinking you know what's going to happen, the exact opposite is going to happen, right? The market has a funny way of proving you wrong, right? So the more you can approach the market in a state of equanimity and acceptance, meaning you have no confirmation bias, right? You're not sure what's going to happen, but also you don't need to know what's going to happen. You just need to understand two scenarios. It's either going to go up or it's going to go down, right? I call this the 50-50 perspective, right? So how it works is the market's going to go up or down, right? There's about an 88% chance that a market imbalance is going to happen, right? Whether it's to the upside or downside, we don't know. But what do we need to see to put on the trade with confidence, right? So over here in the bullish scenario, I spy bullish scenario, gap fill. Today, I'm looking for buyers to show strength at previous day low and hold 505. See, 505 is a critical level from yesterday where buyers showed strength. For me to trade with buyers, I want to see them defend these levels along with strength and structure at open print, looking to target the gap fill up to end of day PDH and 508, right? And then I put a little graphical presentation of what I'm looking for the market to do. Notice I also have 505.98 highlighted, right? Which was the lows from the 26th, right? Because that's basically anytime you could get and hold above a previous low, it's a bullish scenario, right? So once again, you're going to notice here in my pre-market plans, they're not extremely detailed, right? They're actually very simple. If this level holds, I target this. If I see strength at open print, I target the gap fill, right? And that's literally, that's all I write because that's all I'm looking for. See, a lot of traders complicate this, right? A lot of people think since the market's, not a lot of people achieve consistency, that it must be extremely complex and hard. See, the more simpler you can keep it, the better results you're going to get. I don't know about you, but if I'm overthinking, if I'm going crazy with my analysis, right, I'm going to get paralysis. I literally call it analysis paralysis, where you cannot make a decision, right? So at the same time, I'm not trying to be reckless here, but sometimes it's best just to simplify the process, right? So I keep it extremely simple, and I want to show you guys how I map this out. Okay, so this was the day before. Let me make this bigger. So the day before, right, we mentioned the pre-market plan, that 505 level, right? So you guys know the first thing I do each and every single day is I highlight my critical levels, right, which is the previous day low, right, and then previous day high. I just go here, go duplicate. Previous day high is this blue line. So let me get rid of this blue line. And once again, right, I always do this because if I could understand these levels and understand what large money is doing at them, I'm going to have a massive edge. All right, so there's previous day high, check. And then end of day, right? So anytime you're getting a gap down in pre-market, this is the gap fill, right? Very simple strategy. We're looking to play price in between the gap, right? But once again, we can't just take the market long. We can't just assume buyers are going to control it. So I want to see how price reacts at these critical levels, right? So you're going to notice right here in the morning, we came down and tagged 505, right? Now at 505, we got volume. right? It was right at the open. Oh, I'm sorry. Hold on. Open print. Open print is the most critical. It's one of the most critical levels. Always need to keep an eye on it, right? Because it keeps you grounded in the present moment. See, if I'm a trader that tries to predict price action, I'm always going to be behind the curve. On the flip side of that coin, if I'm a trader that reacts to price action, meaning I'm grounded in the present moment, I'm not trying to predict, I'm not trying to guess, I'm not trying to be right. Instead, I'm sitting back patient, letting the market tell me what sort of mood she's in, and then I trade accordingly, right? So open print's going to do that for you, right? Because once you establish open print, right? Once again, 9:30 bell goes off, ding, 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 whatever that price is, that's open print. Once you establish open print, now you have a level that you can watch and see who controls it. And what I really like about this is it literally opened up right next to previous day low, right? So let me just do this. See, when two critical levels open up next to each other, you got to look at it like this. If critical levels are going to paint a picture and you have two of them right next to each other, you're going to get a much more detailed picture of who's in control, right? See, you guys hear me say this all the time. These are my clues, right? When I am, before I put on a trade, I'm constantly looking to see who's controlling these levels, right? If it's a bullish chart pattern, if it's a bullish candlestick pattern, right? If it's some sort of bullish indication via candlestick, right? Or 9D EMA, right? Now I want to trade with buyers, right? Because chart patterns represent human behavior, right? They're either bullish or they're bearish. And the chart pattern is going to tell us what sort of mood she's in, right? So as price comes down to previous day low, look, we're not getting perfect retest, right? You have to be the sort of trader that can adapt to this scenario, right? Just because you're not getting a perfect retest off previous day low doesn't mean this is invalidated, right? I want you to take a step back. Look at it from like a 10,000 feet above, right? If you just had to dictate if it was going up or down today, what would you bet on if the market looked like this, right? Well, would you be bearish? I mean, I wouldn't. I mean, you're getting long candles out of this demand zone, right? Once again, it might not be a perfect retest off previous day low, but there's still an area we're looking for buyers to defend, right? So as price is coming into this level and it's getting soaked up, right? Demand's increasing. We see that through the candles, right? We don't take it long on the first candle, right? I don't even take it long on this candle. Instead, I just process this information in my mind. Bring it back to that 50-50 perspective. If I had to trade up or down at this moment, which one would it be? And why would I make that decision, right? And you're going to do that through the candles, right? And get a general understanding. So now at this point, I'm going, okay, buyers are soaking up shares here at 505, right? We didn't get a perfect retest, but that's still bullish, right? And sometimes it's not what it is, it's what it isn't. It's definitely not bearish, right? I can't tell you how often I make decisions in the market from what I'm not seeing. I'm not seeing strong knifing candles by sellers. I'm not seeing strength by sellers here, right? Which is going to kind of alter my decision-making process towards the bullish side, right? So once we get above that 9, check it out, right? And this is where the magic happens. So boom, we rip above the 9. Some traders enter here, right? Me, this doesn't do it for me yet, right? Sellers are not yet. They haven't lost the battle yet, right? And I say that because we're really extended from the 9, right? We still got 506, right? And honestly, if I enter right here, it's the most important part, guys. I don't have a good stop. See, if you don't have a predefined stop, meaning you understand your risk reward ratio, right? You understand how much you could lose per trade and how much you need to make per trade to see consistent profitability. See, if you don't have that, you're going to enter right over here at 505.75 and get stomped out on this pullback. See, happened to me so much, guys. Don't be the guy that is not aware of his risk reward ratio. Don't be the guy that doesn't understand how much he can lose and how much he needs to win. Be the guy that is completely aware of what it takes for him to reach consistent profitability through risk reward. Can't say it enough. See, I'm hyper aware, right? See, I only like to lose $150 to $200 per contract. That's it, right? And on my winners, I try to go for at least 250 and above. See, that equation coupled with my win ratio reaches consistent profitability, and I'm aware of that. I'm not trying to brag, right? What I'm trying to tell you is my awareness to that equation will keep me from chasing this long, right? And that is what you guys need. That's what's going to help keep you from making those trading errors that continuously ruin your account, right? So become aware of what it takes. What sort of risk can you acquire? What sort of what sort of returns do you need to account for your losses? See, this is the power of risk reward. Think blackjack, right? You can't take $1,000 loss and then expect to play $5 hands and get your money back. It's not gonna. It's just not gonna work that way, right? See, way too often we start to think our analysis does all the heavy lifting, guys. The awareness of risk reward will literally carry you to consistency. I promise you. All right, so coming back, right? Look at how price comes down to open print here. Hold on, let me get rid of the price. I really want to show you guys this. It's important. So we have open print established. Price comes down into 505. Buyers defend it, right? And then price rallies above open print, right? Notice the gap between price and the 9D EMA. See, this is going to keep me from entering, because anytime there's a gap between price and the 9, there's usually, literally like 9 out of 10 times, you're going to get a pullback. You can bet on that, right? Once again, bet on your risk reward ratio. Bet on the pullback, right? Don't bet on the irrational chasing, right? I did it for years. It does not work, and I never feel good about it, even when I made money. Price comes back. We get the pullback, right? And when you're aware of how well the pullback works, and you have conviction in that, when price looks like this, I don't care. I'm not chasing this, because I know 9 times out of 10 this is going to come back. And then when it does come back, now I have massive conviction in entering this. Now I'm prepared. Now I'm waiting for it. When I see it, I can act, instead of just irrationally getting in the market, trying to sustain some chase for dopamine from the thrill of trading, right? So let the market come back to the pullback and ask yourself, where are we pulling back to? Where is price? Where are those buyers coming back in? Straight at open print. Once again, we don't get a perfect retest here, but price holds the 9. This is a sign of strength. Everybody knows my 3-step process. 1, critical level. 2, structure. 3, a healthy relationship between price action and the 9D EMA. So right here we have 1, critical level, open print. 2, structure. We get a break below it. Now we're coming up for a retest, right? This is a bullish structure, right? A higher low. Number 3, healthy relationship between price action in the 9D EMA. Look how buyers react to this. Boom. So once we get in this trade, right, I am now targeting end of day. The way I do this, guys, in a way that keeps me very grounded, once again, is structure, right? I grab the highs, right? And then as I'm in this trade, I monitor it by watching how price reacts to the 9D EMA. Once again, look, we get a little extended right here, right? So when price rips up to 506.20, I have to be okay with a pullback to the 9, right? See, there's a bunch of different ways to trade this. I used to be the trader that would get in on this candle and get out on this candle, right? And I soon started to realize that sort of behavior doesn't sit well with me, right? I really like holding the trade until the 9 breaks. It's a way more structured approach. It's something I can control, right? I'm not just going to get in and book profits immediately, right? Because yeah, at this point I am up around 30, maybe 40% return, right? So instead, I'm going to let the market play out. I understand and have that conviction in how well the gap fill works, right? I mean, look at this gap. It's not the sort of money I'm trying to be leaving on the table. Once again, I'm hyper aware of my risk reward ratio. I understand leaving this on the table is going to cost me money, right? But guys, make a long story short, we literally take price all the way up, right? And as price is hugging the 9, notice what happens. We get extremely extended at this point, right? So once you get extremely extended from the 9, once again, the pullback is imminent. So this is where I'm going to book profits. right? Guys, I hope this video, guys, helped you, right? Playing the gap fill is a great way to get in and out of the market with consistency. If you guys have any questions, any comments, any concerns, leave comments below. I'll see you in the next lesson.